At 9:30 a.m. on August 1st, 2012, one of the most powerful trading firms on Wall Street started losing $10 million every single minute. The men watching it happen had spent their careers building the fastest trading machine in America, and now that machine was pointed directly at them. For 45 minutes, nobody could stop it. Not the engineers, not the executives, not the New York Stock Exchange itself. By the time someone finally pulled the plug, $440 million was gone. This is Collapse File Number 1, the story of how a single checkbox on a single server killed a 17-year-old Wall Street giant. To understand how fast this collapse was, you need to understand how big Knight Capital really was. Knight wasn't a household name. Your grandmother never heard of them. But if you bought a share of stock anywhere in America in 2012, there was a 1 in 6 chance Knight handled it. 17% of all trading volume on the New York Stock Exchange. More than 3 billion shares traded every single day. $21 billion in daily volume flowing through their computers in Jersey City. Their CEO, Thomas Joyce, was one of the loudest voices on Wall Street. Everyone called him TJ. Months earlier, when a rival exchange botched its own software launch, TJ went on television and said their incompetence was inexcusable. Remember that word, inexcusable, because Knight's entire business was built on one promise: our machines are flawless. Pension funds, brokers, retail investors, they all routed their orders through Knight because Knight's computers were supposed to be the best in the world. And buried deep inside those computers, in a system called SMARS, there was a ghost, a piece of code called PowerPeg. It had one job: buy high and sell low, as fast as possible, on purpose. That sounds insane, but PowerPeg was a testing tool written years earlier. It deliberately moved prices to verify that other systems worked. It was never, ever supposed to touch the real market. And in 2003, Knight switched it off. The code wasn't deleted, it just sat there, dead, for 9 years. Here's the detail that should terrify every engineer watching this. In 2005, Knight repurposed the exact flag that used to activate PowerPeg and wired it to a new feature. They reused the light switch, but never disconnected the old bomb. And nobody tested what would happen if that switch ever flipped on the old code again. Now the clock starts ticking. Summer 2012, the New York Stock Exchange announces a new program called the Retail Liquidity Program, designed to get small investors slightly better prices. The SEC approved it in June. It would go live August 1st. That gave Knight roughly 30 days to rewrite the core of their trading system. 30 days for a change that would touch every single order flowing through SMARS, the kind of project that should take months. TJ wanted Knight ready on day 1. So Knight's engineers worked fast. The new code was finished, tested, and ready. And in the last week of July, a technician began rolling it out to the 8 servers that ran SMARS, 1 server per night. Methodical, careful, almost. Monday, Tuesday, Wednesday, Thursday. By July 31st, the new code was live on 7 servers. The technician believed it was on all 8. There was no second person checking, no automated verification, no checklist that said server number 8 never got the update. 1 server out of 8 was still running 2012 traffic on a 2005 brain, and the new code reused that old PowerPeg flag. On 7 servers, the flag meant use the new retail program. On server 8, that same flag meant wake up PowerPeg. August 1st, 2012, 8:01 a.m., 90 minutes before the market opens, Knight systems send out 97 automated emails. Each one flags an error referencing PowerPeg. 97 warnings sitting in inboxes while everyone prepares for the biggest launch of the year. Nobody reads them. 9:30 a.m. The bell rings. The Retail Liquidity Program goes live. 212 customer orders flow into SMARS with the new flag switched on. 7 servers handle them perfectly. And then there's server 8. Server 8 sees the flag and does exactly what it was told to do in 2003. It starts buying high and selling low as fast as physically possible. But there's a second problem. The old code counted its progress using a function the engineers had moved in 2005. So PowerPeg can no longer tell when an order is finished. 212 small customer orders become an infinite loop. Server 8 starts firing orders into the market at machine speed. Not hundreds, not thousands, millions. In the first minutes, Knight is trading entire days' worth of volume in seconds. Inside Knight, screens light up. Volume in 154 stocks is exploding. Vodafone, Ford, General Electric. Stocks are swinging for no reason. On the floor of the exchange, traders are staring at their monitors, asking the same question. Who is doing this? 9:34 a.m., 4 minutes in. The New York Stock Exchange notices the surge and calls Knight directly. Something is very wrong with your order flow. At this moment, Knight is losing roughly $170,000 per second. And here is where the story turns from a glitch into a catastrophe, because Knight now does almost everything wrong. There is no kill switch, no big red button that stops all trading. The engineers never built one because they never imagined needing it. Worse, they don't know which system is broken. The errors don't say PowerPeg. The team starts hunting through 8 servers of code, line by line, while the firm bleeds millions per minute. And then, at maybe the worst moment in the company's history, someone makes a decision. They decide the problem must be the new code, so they roll it back. They uninstall the new software from the 7 servers where it was working perfectly. Think about what that means. The old PowerPeg flag is still flowing through the system, and now all 8 servers interpret it the old way. They didn't put out the fire, they poured gasoline on it. The runaway trading multiplies by 8. What one server was doing alone, the entire fleet is now doing together. It is 9:48 a.m., and Knight Capital is now strapped to its own doomsday machine. 18 more minutes pass. Inside Knight, engineers are frantically reading code they didn't write, looking for a ghost from 2003. The exchange calls again. Other firms are now trading against Knight's errors, profiting from the chaos. Every second of hesitation costs another 6 figures. 9:58 a.m., 28 minutes after the open, someone finally identifies PowerPeg and Knight shuts SMARS down completely. The orders stop. The screens go quiet. And then comes the question every person in that building is afraid to ask. How bad is it? The damage report reads like a war casualty list. In 45 minutes, Knight executed over 4 million trades, 397 million shares. The firm is now accidentally holding $7 billion in stocks it never wanted. 3.5 billion long, 3 billion short. Knight's entire net worth, everything the company is worth, is about $1 billion. They are holding 7 times their own value in toxic positions, and the market knows they are wounded. TJ, the CEO who called other firms' glitches inexcusable, had knee surgery the day before. He's running the crisis on crutches. The losses settle at $440 million, pre-tax, in less time than a lunch break. For scale, that's roughly 4 times the company's entire previous year profit. Knight stock collapses 75% in 2 days. Knight begs the exchange to cancel the trades, call them errors, wipe them away. The exchange reviews everything and cancels trades in just 6 stocks. The rules are brutal. A price has to be wildly wrong to qualify. The rest of the $7 billion mess, Knight owns it. That night, Knight does the only thing it can. It quietly sells the entire toxic portfolio to Goldman Sachs in one massive private transaction at a discount. Goldman takes the risk. Knight takes the loss. The machine that printed money for 17 years is now a firm with days to live. What follows is one of the fastest rescue deals in Wall Street history. Over a single weekend, a group of investors led by Jefferies pumps $400 million into Knight to keep it alive. The price? They take roughly 3/4 of the company. Existing shareholders are nearly wiped out. Knight survives, technically, but the firm never recovers its independence. Within months, a rival called Getco swallows Knight in a merger. Inexcusable, it turns out, was the right word. $21 billion a day in trading volume gone from Knight's hands forever, all of it traced back to one unchecked deploy. The SEC investigation that followed read less like a financial report and more like an autopsy. No kill switch, no code review requirement, no second technician verifying the deploy, 97 unread warning emails, dead code left armed inside a live system for 9 years, a reused flag connecting all of it. The punchline: after one of the most expensive software failures in history, the SEC fined Knight $12 million, less than 3% of what the bug cost. The real penalty wasn't the fine, it was extinction. Here's what makes this file so unsettling. No one at Knight was stupid. No one was malicious. Every individual decision, reusing a flag, skipping a checklist, rolling back the wrong code, was the kind of small shortcut that happens in every company every week. The disaster wasn't one mistake. It was 7 small ones stacked in a row. Risk people have a name for this. The Swiss cheese model. Every safety layer has holes. Catastrophe only happens when the holes line up. On August 1st, 2012, at 9:30 a.m., every hole in Knight Capital lined up perfectly, and $440 million fell straight through. Server number 8 was eventually wiped, like the rest of Knight's systems, absorbed into the new company's infrastructure. The technician who missed it was never publicly named. TJ left finance, and somewhere, right now, in a system you depend on, a piece of dead code is waiting for its flag to flip. 45 minutes, $440 million, one server, file number 1, is closed.